Bond yields are erupting. Take a look at the 2-year, highest level since 2007, and that 10-year is on the verge of crossing 4%. And our next guest said the last time he was on the show that's one of the reasons he became less bullish, in fact, moved to a cautious stance. Joining us now, Rob Luna. So last time you were on, Rob, you were worried about the 10-year smashing through 4%. What do you make of the 2-year, though? I mean, it has gone parabolic. What's the message from that move?
Yeah, I think people are looking short term. I think long term, most people believe that inflation is going to get under control, Charles. And so I don't know that people want to lock their money up at 4% for 10 years. But on the 2-year, with those yields right now, a lot of money moving into there, you're going to see that potentially there could even be some type of inversion when you look at that. But I think right now, Charles, what's happening is there's some competition for stocks. There's a lot of uncertainty going on right now. And as these yields are higher, as I talked about last week, bonds are actually starting to look attractive for the first time in a couple of years.
Even though today's numbers obviously came in hotter, and the bottom line, I mean, not the bottom line, but we've hit peak inflation, right? That was in June.
Yeah.
And I guess the question now is just how long do you think the Fed is willing to wait to get to that 2% target? And, a lot of folks have been talking 2024. Would they be willing to go to 2025? In other words, take a sort of pedestrian route rather than completely wrecking this economy?
Yeah, I think they may, Charles. I think, when you're looking at it right now, the challenge is also with the Fed. They've got a dual mandate, price stability, which is inflation, and also, full employment. And if you look right now, they've got the lowest unemployment rate since 1960, not 69. So they've got some cover, and I think people know that. And so when you see these headline numbers on PPI, CPI come out, people tend to worry that it could go a little bit longer. People were actually, if you look at Fed funds futures, pricing in a rate cut in December. I think that's probably not going to happen, and that's why you're starting to get some challenge with yields here in the market.
All right, so I know you like fixed income. For the folks watching and those listening on radio, give us some names and symbols.
Yeah, so when you look about fixed income, I'm also just talking about yield right here. So BDCs are a way you can play that. One I like is Blackstone Secured Lending Fund, BXSL. You're going to get access to private credit, about a 10% yield. Enterprise Products Partners, that's an MLP, yielding about 7%. I do like high yield plays. I'm buying some Royal Caribbean paper, 5-year paper I'm picking up at about 10 to 11% right now. So that's 3 ideas that people can look at.
Do you get a discount on the cruises too?
I'm not sure. I'm not a Royal Caribbean fan. I'll just take the 10% yield, Charles.
Yeah. By the way, Farfetch, are you taking profits or are you going to let it ride?
No, I mean, that was my one I gave to the audience in December of last year. My stock to double this year. I think it's up about 20%. My target's 10 to 12 by the end of the year.
All right, Rob. Thank you so much, my friend.